Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for this segment, we have Mark Sebastian, Chief Operating Officer at Option Pit. Mark, it's great to see you as always. And this could potentially be an interesting week, right? We have a rate decision this week on Wednesday. We have CPI. We still are in a market where there's a concentration of names leading the way. What are your thoughts around what's going on this week?
Yeah, it's really kind of fascinating. We're coming off a really low implied volatility. VolQ, VIX, they were all at one-year lows leading into this week. Now we're seeing a little bit of a lift, even as the market rallies. And we continue to see just concentration in the market, in the Qs, the S&P 500, continue to increase and increase and increase. The top 7 names in the Nasdaq 100 now represent 55% of the index, which means that the 93 other names are splitting up 45%, while 7 names are basically gobbling up everything. So, the big news this week has been, oh, we're in a bull market. We're in a bull market again because we've rallied 20%. But really, when you look, most of the market has not. It's really just been these major mega cap names that have rallied. Energy has not. Materials haven't. Industrials. All the things. The things that actually make stuff outside of Apple have really just floundered.
Yeah, I wonder, even outside of the Nasdaq 100, these larger cap tech names also have significant weighting in the S&P 500 as well. So of course you have the concentration risk. So, as goes one of those stocks, could go the market in general. But Mark, I wonder if it's just a function of this is the economy that we live in now. Like if you look at the S&P 500, in 2000, all right, so we're talking about before the dot-com boom, the concentration really was in finance and in energy names. And now technology is the leading sector. Maybe this is just more representative of our economy.
Yes, I do think that technology should be a big piece, but it's maybe gotten a little overdone in the PEs on these mega caps, right? When back in 2007, when Chevron and Exxon were a massive portion of the S&P, they were not trading at PEs in the 100s and trillion-dollar companies. They were trading in a PE of 20. And I think that's interesting. The concentration in the S&P has also increased. Those names are approaching 30% of the index, which is really interesting. But, interestingly enough, the Dow Jones Industrial Average, which is price weighted as opposed to cap weighted, may actually be a more diversified index or ETF, the diamonds, than either the Q or the SPY, because of the way that thing is constructed. I never thought I'd say that 30 names could be more diversified than 500 or 100, but that's kind of the way things have been put together. And one thing to be aware of is if you're long S&P 500 and the Nasdaq 100, you have a massive amount of overlap now. And so you have really extreme concentration risk, and you're not diversified the way that you have been in the past.
Yeah. I mean, last week the VIX was trading, 13.5 or
Yep.
Something like that. I mean, it seems as if there's no fear in the market. The market's trading as if we're getting rate cuts, which has not been the case at all. So with that said, what's your expectations for Wednesday?
There's probably not going to be a rate hike. Obviously, that could change. CPI comes out tomorrow, but I think what's important is, what does the Fed say? Do they leave rate hikes on the table? In which case, I think we could see some selling. Maybe that's why VIX is perking up a little bit today. If all goes well, though, there's a pretty strong chance we could see the VIX head below 13 and into the 12s by the end of the quarter, as we head into the July 4th weekend, which is traditionally one of the low points for implied volatility for the year. It's tough not to be bearish on option prices and volatility exposure in this market right now.
Yeah, and then we also have options expiration on Friday, don't we?
We do.
Well, we have options expiration on Friday, but then we have Juneteenth off as well. So that's an interesting dynamic.
Yeah, it's a triple witching this Friday. S&P futures expire, S&P futures options, equity options, and index options all expire on Friday. That can typically lead to an increase in market movement as delta drift, which is how option positioning relative to futures positioning changes over the week. So we could see some fireworks, especially if the Fed surprises some people, because we are entering this quadruple witching and we're seeing September become the main futures contract. So something to be aware of is that June liquidity is going to start to dry up, and right as the Fed is having their big announcement, and that could cause some fireworks on Wednesday. VIX isn't pricing that in, but it is entirely plausible.
All right, Mark, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.